Morning traders, it's Matt here from the Forex Coach. It's Friday the 23rd of February. It's 10 to 9 and we've not taken a trade yet this morning. We had the dollar yen from last night, which we closed out of. It was a very small profit early on this morning between sort of 6 and 7 a.m. And that's pretty much been about it. Now I've got a couple of lessons today actually on trading, and we've just been having a chat with the traders in the group, the members so to speak, and I just thought it'd be a good point to mention a couple of the following points. So let me just pull this up. Okay, so one of the things I've just been speaking about, so while we're on this topic, so we've talked about trading and fitting trading in around your work-life balance and stuff like that. It's a good time for me to point out a few points. We all have busy lives and fit trading in or surround trading with other things. So most people are in the situation where they're not trading full-time, they're fitting trading in around their current lifestyle, their current work, etc. Or in my circumstances, they're trading, but they've still got a life around trading, and they're fitting other things around the surrounding trading with other things. So, for example, in my case, I would class myself as pretty much a full-time trader. I'm looking at the charts and trading more than what I'm actually running my business. My property business, I do run from my office, but obviously it does mean that I'm out. A lot of the times, you know, I have to go out pretty much every day, and I tend to time it when between sort of 10 a.m. and 1 p.m. So I like to be in the morning for the UK and Asia handover, because you get the volatility there and often trade setups occur. And then you have this sort of quiet period between 10 and 1 is usually a bit more quiet, and then obviously it picks up with the US in the afternoon. We often have news up. So, but that being said, obviously I've got other engagements, whether it be family, children things, things to do with children, picking them up from school and all that kind of stuff. But you know, we fit our lives around trading, or we fit trading around our lives. It's impossible to sit in front of the screens 24/7. So, now, as fun as trading is, and as rewarding as it can be, it can also provide us with numerous problems. Now, these problems are specific to your individual circumstance and your personality. So, for example, your individual circumstance, whether you've got family, whether you're married, etc., your problems will be different to the problems of someone who's single, who lives on their own. So, for example, I know it could be as simple as checking trades at night in the evening. You know, speaking from personal experience, my wife doesn't like me when I'm constantly checking trades on my phone in the evenings, etc. So as a result of that, I do try and have minimal exposure overnight. So I kind of adjust my trading to fit around my lifestyle and my circumstance. Someone who's single or lives on their own or doesn't have a wife or children, potentially has the time to be doing that. They might be able to you know, get away with and trading more in the evenings and stuff. Personality, again, are you got naturally a gambling personality? Are you a risk taker? Have you got an addictive personality? Are you find that you're getting addicted to trading, etc.? So those different personalities will have different advantages and disadvantages. Someone who's risk adverse and not happy to take on risk might find it difficult to actually enter trades, and it might hold back on their trading. Whereas someone who's happy to take on risk and has that sort of gambling mentality, then they might be in the position where they're actually overexposing themselves and over trading. So there's always a happy medium, and the person with the addictive personality, or sorry, happy to take on risks, often they're people with also have addictive personalities as well, and therefore they can be addicted to trading, and therefore again taking on too much trading, too much exposure, etc. But just take a step back and remember that even if you can make 1% gain on your account every week, average over your the averaged over average over then your potential gain with compounding to make a lot of money in your life. So just 1%, you would make a lot of money if you compounded that. Now, what you do have to bear in mind, and you can go online and there's compounding interest calculators, and they're good fun to play around with, but it's totally unrealistic because compounding interest, the rate of return decreases as your account balance grows. So making 1% on £10,000 per month or per week is possible, whereas making 1% on £1 million is going to be a lot more unlikely for you. So even if you look at someone like Warren Buffett, who's the king of sort of compounding, and that's kind of what his whole business model has been around, the returns that he would make in his early years are nowhere near matched by the returns that he can make obviously later on, because his net wealth or net value of his businesses, etc., is so much greater that the risk that they take on, you cannot take that sort of risk. So it will taper off, and if you drew a graph of your, potentially you might be able to get your equity gain per month, a nice sort of a nice steady equity curve would be possible, but the rate of compounding would have to decrease. But that being said, look at how much you can make if you just calculated it on 1% per month. So even 1% per month, as I say, will also provide you with a very wealthy lifestyle. So that being said, keep the balance that you need to trade for the long term. So you need to be looking at this at the long term. Don't blow yourself out short term by over leveraging, etc. Don't get addicted to trading. Never leave trades and entries. Take or leave trades or entries. There will always be lots of other setup opportunities. Never jump in because you think you're going to miss out. Live example of this is I wanted to get long this morning on euro dollar. However, my entry point was over here and I wanted a divergence on this low, etc. Now at the moment it's just been pushing up. So, in the early days, I think when I looked at it around here, I thought, I should be getting in, I wanted to get along. So in the early days, I would have definitely been taking these trades and been going in long. Potentially then, it would have then rolled over and my original setup would have been the one to get in on. Whereas these days, I just leave them because there's so many opportunities for trades now. And that I can just take or leave a trade, and I never jump in. If I think that I've missed the entry opportunity on too late, then I never jump in. So take it or leave it, there will always be opportunities. And if you look at charts and stuff, the amount of time they often come back and retest levels before the move, the move happens. 90% of the time they will probably come back to the point where you originally wanted to get in. So on the euro dollar this morning, if this rolls over and comes back down to around this area, then I will be happy to then take a trade on the long side. Control risk and exposure. Remember the long-term game, and if you're out for the day or working with family and not comfortable because the trade is on your mind, then you are over leveraged. If you're in a trade and know that you're going to be doing something where you cannot be checking the trade, etc., then just reduce your position size. If you're out for the day, not able to check trades, you think that if this trade is going to leave me exposed, or I'm going to be stressed about this trade and want to keep checking it, which is potentially going to ruin my time out, then just reduce the position size or close the trade down to a point where you just think, well, I don't really care anymore, because that is the attitude you should have. You should be emotionless to the money. Accept losses as a cost of businesses. All businesses have cost. If UPS have a lorry breakdown or van breakdown and they have to pay for roadside assistance or repair or a new engine or anything like that, even their annual insurance, salaries, they're all costs to business, and all costs to businesses are accepted in a business. We go, oh yeah, you know, I'm running a business, oh my printer's broken, I need to buy a new printer, I need to buy a new PC. Or for me with my properties, you know, my boiler's broken down, I need a new boiler, or I need a boiler repair. And you don't think anything of it, you just go, yeah, it's the cost of business. But for some reason when people trade, they have a loss, they go, oh no, I've just had a loss, you know, I need to win it back because I can't have losses. It's totally the wrong attitude. Losses are a part of your business and you're going to have them along the way. Yes, we try and minimise them, and if we can learn from them and go, oh, I've made a mistake, that loss could have been avoided if I didn't take that entry or I didn't do this, then yes, but a lost trade is just the cost of business, cost of doing business. So just accept them and go, yeah, I've lost that trade, you know, it's a cost to my business. So that's just a quick lesson while we're waiting for this euro to pull back. So we'll wait and see if it does. And in fact, I'm just going to also go through some of my returns. I said I was yesterday. Okay, so this is my profile from my FX book. I recently have changed over some of my accounts. So I've got some expert advisors or some trading robots and stuff, and I'm running on MT5. So I've got this account here, which is the free trading signals, currently 77% up, and that is the shorter line here. So you can see here it's going to be a bit more volatile just by the nature of the of this trading style, etc., and the setup. So it's running very, very nicely, and obviously, you know, a very short period of time. You know, I don't expect to sustain a 70% per month gain on that account. The members signal, or the members tracker, we've been running for a bit longer here. I moved over to spread betting purely because of tax reasons. There are advantages being on CFD accounts. You find you have a lot better leverage, you get slightly less slippage, slightly less market manipulation from the broker's perspective and stuff. But ultimately, the capital gains tax that you're going to pay, especially if you are really profitable, you know, over the course of a year, on a £15,000 or was about a £10,000 starting equity, I'm looking to get this account to be over £100,000. So potentially a £90,000 profit, of which I'll be looking at probably paying, you know, 30 to 40% of that in capital gains if I was on a CFD account. So spread betting, as long as it's not your full-time job, so I've got other income, etc., from other things, then it is tax free. So my gains here are tax free. So I'll just break it down in a bit more detail. So this is the account that I use to for the members trades. So all the trades that I post out in the member signals are in here. I also use this account for my own trading, whether that be mainly scalping. So between those trades, but it's usually in the direction that I'm posting out the main trade for the signal members, that I will be doing scalping in between that, because I do a lot of scalping. So we can see here that I am currently this week 14% up, so profit £2,000, and the month 40% up, so 4,300. And this year, which has only been since the 25th of January, so in a month, on this account, £5,900. So don't look at this and go, oh, I'm going to make those returns, I've got £1,000 account and I'm going to make those returns. My overall trading capital is about £100,000. I don't keep all my trading capital in my trading accounts, because what is the point? I don't want to just sit here and go, oh, look at my balance, you know, I've got £120,000 sitting in my trading account, because I don't need to. I'd much rather that be in my bank account. Reason being is a lot of brokers are FCA regulated, so you've got this £75,000 or £85,000 worth of insurance. As long as the broker is UK registered and your account is UK registered, but even still, if a broker went bust, which happens all the time, then you're gonna, even if you're insured, you're going to find it difficult to and get this money. I think with a bank, so especially some of the big banks, it's going to be a lot easier. Also, the other thing what I do is I spread my money across different bank accounts. So I've got, you know, HSBC, I've got RBS, NatWest, I've got Virgin. So, you know, different banks mean that you can have £75,000 worth of insurance, or 85,000, I'm not sure what it is per person, or per account holder, for across each bank. So, you know, if you have got money, then spread it across, because you basically got free insurance on your money. If it goes bust, the government will back it if we end up with another Northern Rock situation. And there is some concerns. Deutsche Bank in Germany, I think, is really struggling. I think it's posted like 5 or 6 years worth of losses now. So, you know, there's definitely still concerns in the banking industry. They do these stress tests, and I know RBS has struggled with some of these stress tests, and hence why they've decided to sell off a lot of their assets, a lot of their branches, etc., because they were just failing in this bank stress test. But that being said, anyway, that's the returns. So this week, yeah, I'm up, and by the way, this is real account. You can see this MyFX book. It's all verified, etc., these ticks here. So if they're not verified, by the way, people can manipulate them. So just be careful with that. If they're not verified, people can actually go into the server and, you know, potentially make up their own broker and sell you figures on MyFX book, which could be anything. You could literally put in what you want. So yeah, 80%, we're sitting at around 8% of longs and shorts one, or I am. The returns here aren't going to be matched by the members, because they're not going to be taking on all this risk and all this trade that I do. But we have had, you know, at least this 80% plus win rate, I would say, with the in the members group. So I just thought I'd go over that P&L and give you a brief overview of what's going on there. So let's wait for this euro to pull back. If it does, if it pulls back, then we're looking to get along. Okay, just back. So I've been waiting all morning for this entry on the euro to the long side, which I've now just taken. The only concern is it has come off quite strongly, which it was holding up well, so it's come off quite strongly, so there's a potential that this could want to come down some more and even take out this low down here. But I've taken the entry there anyway. If it does come down again, then potentially I might add into this trade, because I still like the possibility of this just pushing a bit higher. Okay, we're starting to push up now on this euro, but it has got a bit of resistance from this sort of sharp downwards move, but it's quite possible that it could just break through this. I'm now heading out, and for a couple of hours I've just messaged members to say, if we hit TP1, trail the stop loss on this part up to just below this low here. So I've given them a level just to trail the stop loss up and mitigate some risk on the trade. Hi guys, just back, and we can see here that the euro dollar pushed up and then it's come off since then. So not 100% convinced, you know, of what it's going to do here. There is some kind of trend line now across these highs. I don't know, something like that potentially. So it might want to come up, break through those trend lines, and then push higher. So we'll have to just wait and see. I was just looking at pound dollar, which I'll just come on to now. When we took that euro dollar long, there was also a setup on pound dollar as well, and it came off on this huge spike down candle. And I was tempted to take this on the long side. It had a 60 pip move there, but took out all of these lows. This would have been riddled with stops that it cleared out on that spike down there. As you can see, huge volume, and then quite quickly sort of reverse. So I mean, from the lows in the space of that couple of hours, that has moved a total of nearly 100 pips, but the setup came sort of around here, but there was just too much risk, because sometimes when it puts in a spike like this, it wants to then just come down slowly and then take out the low. So it was a matter of, you know, where do you put your stop loss. Unfortunately, that would have been the setup though, to take that on the long side, because it's pushing up quite nicely. But there you go. Some you win, some you lose. I just thought I'd point that out. And again, when we're talking about trading and the emotions of trading, it's important not to look at it and go, oh, why didn't I take that trade? You know, I would have made, you know, loads of money, etc. Because, you know, there's going to be opportunities all the time. So sometimes you hit them right, sometimes you don't get the best setup. Okay, still sitting on this euro dollar. It's come down again. Looking a bit stronger now with this price action. We've got this bullish engulfing candle here on the 5-minute chart. So if we can get a run up and break through this trend line, then we'll be looking in a better position to come through for some further upside. I've also got another trade now on Aussie dollar. Now we've got to be careful because I have exposed extra dollar. I've got extra dollar exposure. So as I've sent this trade out, it was this entry here that I've actually sent out. Down here, the point is that only take this if you're happy to take on the added risk. There is the chance that both trades could fail, bearing in mind they're both long or playing against dollar weakness, and so we need to bear that in mind. And I've only taken this because I'm having a good week. I'm up for the week, so I can afford to. If both these trades fail, it's not going to be an issue to me. Euro's coming up to this trend line now, so it'd be interesting just to see how it reacts. Okay, Euro's doing well here. It's just coming up to TP1. It's coming up quite quickly. It's had a big move, so you know it could pull back here. Okay, we're still holding up here. It's had a bit of a pullback. This could still come back down and retest this trend line before then it pushes higher. So I'm going to hold out for these target prices at the moment. Aussie dollar's doing okay. It's pushing up. Euro's kind of holding here, but it's got potential to come off again, so I'm tempted just to take the first part of this trade off now. Okay, so this is the picture of the euro dollar now. We got 2 pips from target there. I was tempted to bank it, and I said that I was going to bank, and I missed it, and it's just fallen off here. So not too sure what's going on in the price action. It has got the potential to continue this downtrend, so I have got that in the back of my mind. What would have been nice is if we had got the half profits off up there, then we could have trailed the stop loss up, which was my plan to this low. So I'm just having to think what to do with this trade. The Aussie dollar has done better. I have taken half of this trade off. And actually, bearing in mind what's happening with the euro, I am tempted just to close this trade off and then just hold on to the euro. Okay, I've just closed out the second half up here of this Aussie dollar. I feel, personally, it looks like it's got the potential to push up, because I'm in this euro dollar trade as well, and I don't know what's going on with that with regards to this sell-off. I just thought I need to mitigate some risk here and close out and bank that position off. So that's what I've done. I've still got the euro dollar open as we stand. Okay, we're still in this euro dollar trade. It's coming up for this trend line again. Potentially that was a bit of a fake out there, but hopefully we can break out for this trend line and try and push higher. If we can sort of close above this trend line, what I'd be inclined to do at this point would be to trail the stop up. It's late on in the day, it's Friday, I want to get out of these positions. I've had a good week and wrap up the week here at the